All right, let's get started here. Welcome everybody. It is Income Navigator live trading here on a Thursday, December 11th, and lots of stuff going on in the markets today. Market's giving back a little bit of yesterday. Was down earlier. We've recovered off the bottom. We're going to cover a couple things in the sessions today, so bear with me here. I want to spend a little time today as opposed to just normally just going through charts and giving you some trade ideas. I'll do that if I have time. I want to actually go through the account trading plan a bit and just kind of show you where I am on this on my plan. And then if you've got your plan, these are things I suggest that you do on a pretty consistent basis. So let's jump into this and take a quick look at where we are. So bear with me. I'll get off video and we can look at the strategy builder. So with the trade plan, the strategy builder is really the key for me. Yeah, I've got a trade plan that I work, but all that trade plan goes into this strategy builder. This really runs everything that I do. So I try to adhere to this as closely as possible. This gives me my guide of what I want to do. So when I look at the strategy builder, should match my trade plan, but my core trades, which are really in the light blue here, is the obviously the ES 112Cs. That's my main core trade. I allocate 30% of the entire account to this, which should take up right now around 66,521 in buying power. Again, to come up with these BP and profit numbers, you just have to put on a handful of trades, take some averages there, get a sense of what that looks like. Maybe over time, you update these things as BP moves and such. But for the most part, these are pretty accurate. The average days in trade, pretty accurate based upon trade history here. So it gives me a sense of how many units a month. Now, units a month here would be essentially naked puts. It tells me I can do about three, up a little bit more than that right now. So we'll talk more about that in a minute or two. I should make about $3,800 a month, sorry, on this with a 90% win rate and a 200 or a 2x max loss or 200% max loss. On average, I should make around $2,700 a month on this. Right. But we're using about 66,000. So we're going to see how this translates. Let me just keep going for a bit. I have SPY and QQQ as income poor man covered calls. I do separate them out from the other income poor man covered calls. I may not do that in the future, but I like to keep those separated because again, those are more market driven than anything else. And I like to have the stability, even though these don't necessarily return the kind of juicy returns that you can get in other areas, stocks, more volatile underlyings. I'm okay with that because I think it still gives me really consistent income. And I'm looking to generate about 2,400 bucks a month from this. And then the regular income poor man covered calls, same type of a setup, looking to generate about 1,700 a month from those, allocating about 33,000 to those. Strangles, still one of my favorite strategies, about 10% of the account in Strangles, $22,000 worth of BP is allocated to that. Looking to generate around $3,300 from this. Strangles being one of the best return trades. So I can try to get again about $22,000 is what I'm looking, and then I do have a large amount of my account devoted to spec trades because I do like the 112 trades on oil, gold. I like the 112 trades on some stocks. I like naked puts on some stocks, whether it be like UNH or strategy. I like naked puts on maybe bonds that, here and there. I like the Jade Lizards that we put on. So this gives me a lot of ability to be flexible here. I'm only expecting about an $800 return on these, which seems fairly low, but when you have an 80% win rate on these and a 200 expected loss, I'm going to out generate this most of the time, but that's all I need. And if I do this, I'm going to come out with about 10,000, almost $11,000 a month, which comes out to about 2.72, which is perfectly in between my 2 to 3%, 2 to 3% goals that I have. So my goal is, hey, let's generate around $11,000 in gains this month. All right. That being said, let's look to see how this plans out or comes out for me. Right. So when I look at my open trades, I do have this allocation target up here, and it actually grabs the number from spec trades at 44,000. It grabs it right from here. All right. And the same thing with income poor man covered calls. It grabs it from the front. And then I'm keeping track of initial margin that I use in here. So this is the initial margin uh, that is allocated to each of these individual trades when I put these on. All right. And I'll grab some questions in a little bit. Let's knock this thing out. All right. So when I look at my spec trades, out of $44,000 is my allocation target. Okay. Oh, and let's go back to the dashboard one more time. Um, I have a uh, I have a target rate of around 55% of BP usage at all times. I don't flex it. It doesn't go up. It doesn't go down. Okay, it can, but I mean, as far as goal wise goes, no, it doesn't go down when VIX drops. It doesn't go up when VIX rises. It's at 55% almost all of the time. That's where I feel very comfortable with the trade strategies that I have. I 100% do not agree with the tasty trade uh, use VIX to determine your buying power. I think that's bananas, but that's again one man's opinion, so it doesn't really, my opinion doesn't matter. But I think it's silly to only have 25% of your portfolio invested when the VIX is at 14, 15, 16. When there's no volatility, that's when I want to be in. Okay. When there's high volatility, I don't want to be in as much. So I don't want to go super high. Okay. I like the fact that I like calm markets. Okay. I think Igor and I shared this very same ideal out here that why do we want to trade when markets are crazy volatile? I want to, I'm not going to get more risky when markets are volatile. I like to get more risky when markets are dull. Okay. Well, if you're selling premium, Tom, and VIX spikes, you're going to get beat up. Well, maybe. Okay. But that's trading. If you follow your trades and your stops, and I think you follow your allocations here, I think you're not bad. Now, if all I'm doing is selling naked puts or something like that, then yeah. If all I'm doing is 112 trades on ES, then yeah. But I only have a 30% allocation to those. Okay, not 60, 70% of my account is not in those trades. Okay, it's pretty spread out. Okay, I'm getting around $2,000 to $3,000 per strategy. Okay, to get to that 10. I hope this makes sense. I hope this is helpful or not to you, but that's my take. Now, I have $75,000 in margin being used for spec trades right now. Okay. Now, my buying power here is at 51%. Okay. So technically, according to my BP uses, I'm at 51%, and I'll go up to 55%. Okay. VIX is very low. It's 1554. It's dead. It's a useless number. Okay. So I don't really even care about the VIX at this point. Uh, but I still have buying power available to spend. Okay. So even though I'm over allocated a little bit in spec trades, okay, I still have more BP to use. Okay. All right. Let's keep going. All right, Nick, I'm going to get to that one, so I'll answer your questions. All right, so these are my current trades. Okay, we got the strategy strangle, we got bull call, another bull call here. Those may not be great trades. We'll see how they plan out. I got a QQQ naked put. This one I'm shooting for 90% or assignment. I got 112s in oil. I got 112s in Palantir. I got 111s in gold. I got a Jade Lizard in oil. So again, I'm using my spec trades here, but you can see my spec trades, and this strategy strangle is technically a spec trade because I really am allocating my futures trades to strangles, not stocks. I rarely will ever do a stock trade with a strangle. Almost never, except this strategy trade. I just think this is a good idea. We'll see. It might be a terrible idea. Who knows? Um, but we've already closed one for a really nice winner. We'll see if we can close two. Okay. We'll do it until maybe we can't. Uh, so that's the only reason that this strangle is classified as a spec trade, not a strangle trade, because strangle trades for me, typically I'm doing those on futures. Hope that makes sense. Okay. But you can see mostly naked puts, 112s, some jade lizards, pretty much the same. I don't do anything crazy. You're not seeing, ratio spreads and bull call spreads, and I just don't do a lot of that stuff. I'm pretty basic on what I do, and I am a little over allocated on spec trades, but they've been so good to me, and there's so many spec opportunities out there at times, here or there, to find stuff. Okay, I don't love the overall market, but there you can always find something that fits. And then this trade here, which is our ES 120 day 6 delta naked put campaign style trades that I do. I classify those as it's technically a spec trade, okay, but I do track them on my portfolio tracking sheet separately here. But the income will go into it's classified as a spec trade as far as this goes. Okay, so there's that. All right, then we get into our income poor man covered calls. I allocate about 33,000 to that. I'm at 45,000. I just added this SoFi trade. This SoFi trade added about $10,000. So this, I was right on the money. I had extra buying power. Okay, so I allocated it here as well. So I'm at 45,000 on this. And again, the initial margin numbers don't always match what the maintenance margin is as far as BP goes. So there's always a little bit of a difference. The initial margin can be higher than the maintenance margin in the account. It can also be lower if we spike up. Okay, but I just track the initial margin when I put on that trade. All right, so I now have four. SoFi is the new one, Strategy, AVGO or Broadcom, and then Gold. Right, so those are the four trades, a little over allocated, but they're not craziness. Okay? But I am low on BP. Right? As we come down, here's the SPY and uh, QQQ. This is under allocated. I want to be right closer to 55,000. I'm only at 26. I just closed one of the SPY leaps because it was getting short on time to expiration. So because of that, it took about $10,000 off of the allocation, but still I'm a little light. I've had a hard time getting into more QQQ and SPY trades. They just have not, with the market just never pulling back, it's been really hard to add those. I expect that if we get a decent pullback, I'll be able to increase this allocation and probably pull back on some of the spec trades. So I'm a little light here, but I'm light because it's been doing well, but I just can't find good entries on it, and I'm not going to force it just to hit my allocation. All right, and then Strangles here, $22,000 the budget. I'm at $22,000 essentially. I'm right on the money with these Strangles. Nick was asking, they have the highest P&L in my strategy builder, but I give them the lowest allocation. How come? And really, I like to just be balanced. I find it hard. So because I'm doing mostly Strangles here, and I only really trade four or main futures, and that would be ES and oil and gold and bonds. Okay. I can't overlap. I don't want to have two Strangles on in any one underlying at a time. That's too much risk, in my opinion. And I think I have a really nice spread here of bond, oil, and gold Strangles. And right now, the oil Strangles up 33%, the gold Strangles up 5%, and the bond Strangle is up 20%. So I like the fact that I have a pretty good ratio here. So even though these do pay well, and when we look at closed trades, okay, and we can look at the pivot table or closed trades on these, we can see how Strangles are doing for the year. Now they are doing well, I just don't want to over allocate to them. I find it, I would be pushing and I would be doubling up Strangles if I got any bigger than this. Could I increase the size? I think I should technically increase the size of this. So I think you're right. I think Strangles are, to me, one of my favorite trades. But I like the consistency of the 112s down here. So I think you just really um, take a look at what you have. So um, let's let's look at the 112s down here. Again, 66,000 is the allocation, and we're at 62,000 right now. Now, I did go from two naked puts every 112 to now it's four. So I have increased the size. I've doubled the size of my 112. So I'm now doing 224s technically here. So that's going to definitely increase the income. These have not started to come off yet. I'm finishing up with the last 112. That thing is at 87%, so it should come off, and it's 38 days in. So we have within the next 7 days, because typically 45 days these come off. I expect this one to come off. I'll be putting a new one on Monday. That will definitely increase my allocation a little bit more when I put one on Monday, because instead of spending about 12 to 15 grand per, I'm spending closer to 26 to 30 grand per. This one will drop off. I'll add another 30. That's going to put me closer to 90. I may need to look at my allocation. Otherwise, I would be doing like a 112 one week, and then 2 weeks later, I might do a 224 to try to keep it at that three. Because remember, three was kind of what the units a month were telling me uh, to use. So we'll see how it uh, filters out. I'm less worried about this units allocation as I am the portfolio allocation. So it's possible that I could increase or decrease one of these going into the new year. What I will be doing is we'll be evaluating each of these strategies. How did they do for the year? I look at them every couple months anyway to see, do I need to change my allocations? And maybe. But also because I have extra buying power, I've been just making extra money with a lot of spec trades, and I've been pretty good with spec trades as well. All right, so I hope this makes sense. This is how I use it, and uh, I really am keeping an eye on, are my allocations in check? And for the most part, they really are pretty close to what I need. I'm a little under allocated, obviously, in the SPY and QQQ income compartment covered call, and I'm over allocated in spec trades. Right? Uh, we'll see if that needs to change because I've had a hard time finding those. Um, And yeah, you could just add an income plummet covered call with here, but I have a hard time buying stuff at all-time highs. I really do. I want a discount because even though we're making money on the extrinsic and that's the main goal, you do want the underlying to be at least moving higher. So I think if you're buying at the highs, a lot of the income potentially can come from that price appreciation, and it has. All right. Uh, all right. So let's go through this really quickly on the income poor men covered call. We're sitting here about 65%. We did sell off, or I did sell off um, one of my leaps because I was just getting low on time because the expiration date is January. All right. So I don't want to be heading into um, I don't want to be heading into January with, which is less than 30 days out now, or almost 30 to 40 days. I think once you get to about 45 days or so, because again, that's where typically the most theta decay starts to happen, then that's, I think, where you want to start to look to close off the longs and then maybe reestablish. Yep. All right, so that being said, hopefully that answers a couple questions here as well. So you can see I closed one off here. Uh, We're doing fine. 65% up. We've made 31,000 on this trade total for the year. We'll probably open up a new version once we get a new Spire QQQ. The Qs are up almost 70%, but unfortunately, I just didn't use enough. I only was doing it with one contract, which is not bad. Okay, but uh, not too shabby. I wish I had had more allocation to QQQ on it. Strategy, here's the strategy one that we have running right now. The current value on the strategy is here. So we're actually down on this one currently. But as soon as we close this, uh, as soon as we close this one, we'll start to generate some cash because we have $2,100 of extrinsic that's going to come out on strategy. In fact, we're going to close that here in a few minutes. And let's just do it now and we can enter it. All right, so you can see how I'm tracking extrinsic. So let's get into our portfolio. All right, so here we are, and here's the covered call. We're at 93%. We have $210 of extrinsic left. Okay. We opened this one up at 2,100 worth of extrinsic. Okay. And now I've got 210 left on it, right? Because right now the underlying is at $174. Okay. And this thing's the 185. Okay, which means we're $11 out of the money on it, and this thing's worth roughly 10.50. So you've only got about $70 worth of extrinsic left. Okay, or I'm sorry, 70 cents of extrinsic left on it, 50 to 70 cents. Yeah. So subtract again the 10.57 from uh, the difference between the 174.50 and the 185, and then that'll give you your extrinsic left. So there's $209. It's at 93%. I could let it go till tomorrow. We're not in the money. There's no worries, but you know, why hang on to 200 bucks when maybe we could make a little bit more? So let's roll this and let's roll it out to next Friday. And we're obviously going to be rolling down on strategy. I mean, we're at lows, so I'm going to keep selling at the money or slightly in the money on this thing. All right, so let's do that. Let's just sell. I really feel the 172 is probably not bad. All right, so we'll sell just a little bit in the money because even though I don't want to go the full boat here on this one because I really feel that we're kind of at a low on some of these Bitcoin plays that I don't want to get too crazy. But this gives us lots of good protection. Oh, I'll take that. All right. We'll do the 170. All right. So we'll do a little bit more in the money. This is going to give us $5 of downside protection. It's still going to give us $5.97, almost $6 of extrinsic. $6 of extrinsic, okay, is going to give us about $1,800 worth of extrinsic on this. So let's go ahead and roll. Okay. And again, we're going to close this one out for roughly $210 of extrinsic. Okay. So that's, that's what I'm going to keep track of is that $210. This making sense? Everybody good? Uh, let's see. Questions in chat. Strategy 168. Yeah, I mean, you can go more in the money. I just feel that we're trying to hold this 170 level. So let's just see what happens. All right, we might have to tweak it a bit. I just want to close this one so you guys have a sense to see exactly what I'm talking about. Okay, done. All right, so it was $210 of extrinsic was what was left. Okay, when I update my sheet, that's what I'll be looking at. The new one here, you can see this new one has essentially $1,800 of extrinsic. Okay. So that's what we're going to be looking at here was that $1,800 of extrinsic that we just talked about. So we have $6 of extrinsic times the 300 shares, right? Right? Because we sold a 170, which is $4.50, okay, in the money. So we sold $4.50 in the money, and we sold this for $10.50, roughly 10.44. So that's $6 of extrinsic. So 1,800 of extrinsic is what we'll be tracking. Everybody got that? I hope so. All right, so there's what we got. Let's go back to this sheet. I'm not worried about, yeah, I'm not worried about any of that stuff, Desmo. If it results in positive momentum, isn't that a good thing for us? So I'm happy with that. I don't mind being in the money because what do I care about here is really just the extrinsic is all I care about. So now that we're back here, we can close this thing out. Okay, so let's close this out. 12/11 is today. Okay, we bought the close at 68 cents. Okay, so we booked $3,000 in profit, of which that 210 was the extrinsic that was left out of the 2100. So we made 1890 of extrinsic on this thing. Okay, and then we opened a new one here at 1044. Okay, with 1,800 of extrinsic. And again, I'm tracking this extrinsic. If you're comfortable with these trades, you don't have to do that. I'm doing this to give you guys a sense of here's what we could make on these things here as a whole. So I've already made 1,800 of extrinsic on it. Is the entire trade is down, but that's fine because mainly the main is down. Okay, we booked some nice gains, but you don't want to look at this every week. We don't care. What we care about is what's this extrinsic column going to look like every single week? All right. Well, if I'm generating somewhere around $2,000 a week of extrinsic, do I really care what the stock is doing? Okay. Same thing with, what if it runs higher, Tom? Yeah. What if it runs higher? What am I going to do if it runs higher? I'm going to have to buy these calls back for a loss, okay, which may wipe out some of the gain. I just got this, but again, it's not the P&L gain that's important. What's important? The extrinsic. So even if this thing shoots up, I'm in the money, but I wait until almost all of my extrinsic is gone. Okay, I'm going to book in another, let's say, $1,600 of extrinsic. Okay. That's my cash. I keep that no matter what the stock does, no matter how much I have to buy it back for a loss or buy it back for a gain. This P&L here is not as important as the extrinsic that I'm going to generate over time. And then over time, that will offset any of these ups and downs from the calls or the gains on the unrealized gains. Okay. So this one's down a couple $100 right now, but we're early in the process with it. So I hope this makes sense and gives you an idea of how these things are working. And I started just tracking the extrinsic recently. And one of the things I looked at too was back here. This was the amount of extrinsic that I have sold so far in December. Plus, I got to add. Plus, I got to add the one the 1,800. So I'm pretty happy that I can now that I'm selling probably $30,000 of extrinsic in a month, or $20,000 of extrinsic in a month or more. I'm pretty happy. All right. So anyway, going up is not the problem. Only when plummets and plummets within days might be a problem. It's not a problem if you're selling in the money, right? Because you're getting, not only are you protecting your downside, okay, but you're getting the extrinsic as well. So not only do you always get the extrinsic, but when you sell in the money, you protect your downside, which is why I like these versus standard covered calls to generate cash flow. All right, so I hope this makes sense here. And I'm never worried about things going up. If things go up, I'm pretty ecstatic. Okay. It can go up. I don't mind buying these back for losses. I don't mind $16,000 in losses here on SPY, almost $17,000 in losses on the P&L, but yet I'm up 70% while the stock is up 13% this year. Okay. So that's all good. It's all fine for me. I don't mind that. If I was doing, well, if you just bought the leap and you didn't sell those, you'd be better. You would be, but it's not my plan. Okay. It's a completely different strategy. Okay. What if these stocks went down like strategy did? And I keep pointing these out. Okay. But what if your stock went down 20% and you were selling and you just bought the leap? Well, then your leaps would be down 50 or 60, 70%. Okay. But no, I'm up 20% when the stock is down 20. Okay. I'm up 10% when the stock is down 41%. Okay. Because I'm selling in the money on it. Okay. So you can tell me that, hey, if you just held the leap or done poor man covered calls, you'd have made more. Maybe. Okay. But that's hindsight because how did you know the stock was going to go up that much? Okay. What if it went down like some stocks do, right? What if you had AMD up until the last couple months and it was only going down? Okay. You couldn't say that on this. All right. Anyway, there's enough. That's enough, I think. That gives us a good overview of how I'm running my plan, okay, how I'm allocating my cash flow here, and how I'm allocating my account cash as well. Right. So I'm pretty close to my allocated targets. I'm a little bit high, but also because my buying power has dropped because the initial sometimes does drop when the markets are going up. So I feel pretty good. I don't feel overstressed at all. And my BP in total right now is only at 49.8 right now. Okay. So I'm good. I sleep great, and I've got the trades on that I want, and I think size wise, I'm pretty much right on. So again, pay attention to your strategy builder. This thing is the key. This is what runs everything. You can have your trade plan, okay, and your trade plan is great. It's going to give you all the details of how to trade and how to do everything and what your goals should be, how to manage your rules, your goals, all of these things. But once you've built your trade plan, okay, then this is how I make sure that I stick to it. Okay. All right. So I think that's enough. Let's move on to some different things here. We got a half an hour left. All right. Give me a second. All right, let's get into some stocks. Okay, and here's that strategy as well, right? And I was looking at this when I was selling there, is that I did sell in the money, okay, but I kind of wanted to be at the money a little bit. Why? Well, even I'm taking a little license with my strategy. The 8 is below the 21, which would mean go roughly using the average true range or the expected move and sell in the money when something's in a downtrend like this. But I like this base that we're in. I like the base that we're in for Bitcoin here as well. I really like this area. I think we're basing out in Bitcoin, so I expect a little bit of a bump. Uh, but I don't expect anything monstrous. I think strategy's got some problems. I'm just making money while I can on it. Okay. Do I think it's the greatest stock ever? No, I think it's not the good stock. Okay. But I think it's a good trading vehicle for me. Would I be buying this in my investing account as a long-term hold? No. Okay. But as a trading vehicle with the volatility that you get here, I think it still sets up. It's not set up good for a strangle right now, but I think that strangle is going to pay off on it. Okay, let's get into a couple quick things here. Taking a look at ES. Okay, we've been in this trading range now for a couple weeks. We've been just in this same box. We're struggling with this level here. This is the November highs. Okay, we tried to take them out yesterday. Didn't work. Okay, today we might make another run at them. We're at the top of the box here. Um, yes, normally, and real quick on that question, I do go one ATR in the money when the 8 is less than the 21. Okay, either one ATR or the expected move. You make the call on what you feel comfortable with, which is why I made a little bit of a call on strategy there, um, just to make that just to make that call. All right. So ES looks good. I think it's bumping up against this resistance. It just can't seem to get through it. Tried yesterday. It's making another little run today. It's well off of its lows. We came down, tagged the 21, and moved up here. So I like it. I'm still bullish into year end. I think we break this piece. I think we head up here to the 69.50, and I think the 7,000 uh, is definitely within sight um, in the next 3 weeks, 2 weeks. What would I be doing on ES right now? I'm just sitting here with 112s. It's not a great strangle trade, although it's not terrible. It would generally fit the strangle setup. So I could put a strangle on. We're at the top of the range for strangles. I want to be between 40 and 60 RSI. I'm at 60.67. Technically, I'm a little out of the range. It's not the worst thing in the world, uh, but I'm bullish. So give it a little bit of time. Uh, a BA. Here, we're going to look at an at the money and a BA 112 in a minute. It's not overbought, so I'm kind of hesitant on the BA right now. Okay. I don't think it's a bad thing if you have buying power. I don't think getting into a BA 112 is a bad thing here. Uh, if you've got buying power, I have some, but not a lot. So I don't know if I would want to do it, but yeah, if it makes sense to you, I don't think it's the worst thing in the world uh, up here. Right. All right, oil still sucks. Bearish trend. It continues to be bearish. I think it goes lower. It's trying to hold this previous November low. Broke it fractionally today off of its lows, which it usually does during the day. Oil always starts off lower and finishes a little higher um, on the session, but I don't like it here. So right now I'm not trading oil. There's no trade for me. It's not a strangle setup. Uh, I don't I don't want to put naked puts on here. I don't really want to do 112s on here. I'd like to see something firm up a little bit, and I'm not seeing that at all. And we're possibly entering a squeeze triggering to the downside. You got MACD falling, RSI falling, squeeze. There's nothing good about oil here except the fact that it's at the bottom of the Bollinger Band, but that Bollinger Band's really tight, which is why you have a squeeze happening down here. The squeeze shows you with the reds and then a yellow, and then back to red. That shows you that you are in a pretty good squeeze right now. All right, so there we go. I don't know what the question is. I out of an oil January 14th. No, I'm in that thing. Right. So I'm in it as a spec trade. Yeah. I'm still in my oil 112. It's down a couple $100 right now. I wouldn't be adding it when here, but I'm not getting out of anything. I don't have, I only get out when it hits one of my stops. Okay. Not based on charts, nothing else, just mechanically in and out. All right. There's oil. Again, I would probably avoid it right now. That's just me. I really like what gold looks like here. It's starting to break these November highs. Okay. A little bit of a cup and handle, a little bit of a consolidation range here, and now a breakout of that. I think gold looks good. If you look, MACD's certainly improving. RSI screaming higher, almost overbought, and then you've got a squeeze still hanging in there pretty well. 8 above the 21, stock above the 21, bullish PSAR. What's there not to like about gold? I'd still be putting on like 112 trades in gold. Now I'm already sitting on a 111. It's up 65%. I'm sitting on a Strangle up 8%. This is not great for the Strangle to have the big breakout to the upside. I don't know that gold goes ham to the upside, but we'll see. If it does, it does. All right, and then bonds here, uh, bearish PSAR, 8 below the 21, stock below the 21, RSI below 50, all bearish on bonds, but nice little base in here. Tried to make a little run today, failed. It's just kind of blah down in here. I don't think, though, that it's a bad strangle setup. Okay? I like it if it would climb this morning when it was closer to the 21, it wasn't bad, but you've got an RSI at 42 and rising. I'd probably give it a day, but I wouldn't mind putting on a strangle in bonds. I already have one though. It's at 22%, and it's only 9 days old, so I would be overlapping what I have. Okay. All right, so that's what you got there. Silver is bananas. So if you're in it, congrats. I'm not in it, but it's rocking and rolling. If you're in the small caps in the Russell, this thing is going fantastic. You could be putting on 112s, whatever in this thing. I think this is extremely bullish on small caps. They're finally getting their outperformance. They're hitting all-time highs now. They're the only index right now at new all-time highs. All right, briefly here, just Amazon. I mentioned this yesterday that it's breaking out of this downtrend that we've been at. You can barely see here the 8, the 21, the 50. They are all super tight here, and it's trying to hold on to them for dear life. It looks like I gotta make this MACD because I don't. TradingView squeezes it so much, but it's starting to reverse. Squeeze has been reversing. RSI's just kind of flat and sideways. I'm not a big strangle guy on stocks, but this is not a bad strangle. Okay? It's also not a bad play on this breakout. Do I think it's going to go crazy back to here? Not necessarily, but I think you could strangle it. Okay. All right. Let's keep going. Nvidia not doing well because you had the Oracle news yesterday. A lot of concerns about overspending on AI. I think that's just hitting the semis. I think the semis will be fine, but I just don't like Nvidia myself much here. I certainly think this thing can go higher. It's gone nowhere since July 25th. It's actually at the exact same price it was on July 29th. Okay. So you've now gone 5 months and you've gone nowhere for 5 months on Nvidia. I think you could be in for a lot more of that. Again, it's an opinion. Okay. But the chart tells me no, don't do it. Okay. Bullish PSAR, yes, but RSI falling below 50, 8 below the 21, stock below 21. That's all no goes. Okay. Tesla, not bad. But again, this thing hasn't moved either since about September 22nd. So you got 3 months in to Tesla and it hasn't done a thing in 3 months. Okay. Great strangle trade. Okay. Again, I don't love strangles on stocks because I think they're just so news driven, which I hate, and not fundamental driven. They follow their fundamentals over time slowly, but they're just so day to day, week to week, volatile to news. There could be a crash on a Tesla tomorrow, kills 3 people, and the stock tanks 20%. Has nothing to do with fundamentals, which I just don't like. But it's a good looking stock here and a good looking strangle as well. So this is a bullish stock along with Amazon. I'd be considering both. Meta, it's just kind of making this rounded base, a nice little bull flag potentially here on this piece. It filled its gap. I don't think you can expect it to go all the way back up, immediately, but it's filling the gap at some point. Everything fills the gap. Okay. So at some point, it'll probably fill this gap. And I think that's what I'd be watching. But would I do an income form income recall on it? Maybe. I mean, it's not the worst position to do it. Gives a little volatility. Um, I guess it depends. Do you like Meta enough? I mean, I like what I have better than Meta. I like SoFi better. I like Broadcom better. And I like Gold. So I like what I'm in more than Meta, but it might be a decent one. We can take a look at it. Apple doing just fine. Nothing wrong with Apple. It just sails along, doing its thing. Um, I'm not in it, but it's decent. This is a bit of a bull flag here. Oh, you know what? Let's just do it a different way. So I get the exact same piece. So yeah, a bit of a bull flag here that if it breaks out, I think Google, is an option on the breakout here. It's not breaking out. It's back into this flag. So yeah, give it a little bit of time, but it might be a good setup. Okay. It's a little lofty. Okay. RSI is falling, which I don't love. All right, Microsoft down here is not my favorite thing. Palantir's doing fine. A bunch of different levels I got on here for Palantir. Everything looks pretty decent for this thing. It's stupidly overvalued. I hate this stock, but I will still play it. Okay. And one of the questions was uh, why, what's my stock selection on 112s on individual stocks? Well, this to me is a great stock selection for that. So what do I want to do with what's a 112 trade? It's a bullish to neutral trade. Okay. I certainly don't want something that has like too high of a that's too extended. This thing was at the top of the Bollinger Band yesterday and it's pulling back again today, but it's off its lows. RSI is at 62, so it's a little lofty, but it's not bad. The eight's above the 21. They just made a cross here. It could go higher, but there's some resistance in this spot. I don't think it's bad. So I think this is a neutral to bullish trade. Squeeze is firing. If I was doing a 112 right now, I think Palantir would be an option for me. Okay. It's much more bullish than Amazon. If Amazon breaks above here, okay, and we get the 8 crossing the 21, Amazon might be a good one. Okay. Tesla, it might be okay because it's kind of neutral with a bullish look to it. Tesla may not be a bad one either. And then Hood, not a perfect setup. It was a decent looking setup the last couple days. Pretty good selling here today. So I think you just got to give this thing some space and see what happens. But again, it's also a decent looking strangle trade. And if it drops, a strangle might be the way to get assigned and get into Hood as well. All right. So, and then Broadcom earnings are tonight. So, question will be, and I got to wrap up in 10 minutes. Question's going to be, well, what are we going to do with our call? Well, it had dropped and then recovered all of that today. So it's only down $8 where it was down at one point. Uh, it was down quite a bit more, 10 more points. It was down like 15, 18, 20 points, almost 18 points, I think, on the day at the low. I love the company. You got earnings tonight. Is it going to be an Oracle situation where, it shows any sort of weakness? Because any sort of weakness in Broadcom is gonna hammer this thing. Okay. Right now, the expected move on Broadcom is about 30 some odd points, or almost 30, 25 to 30 points. Okay. Which from here would put us about 370 something, uh, right in this spot. So expected move could be pretty decently low on this thing around the 370 level, okay, to the downside. So if it could still beat and then issue a little concern and guidance about maybe any sort of slowdown, loans, borrowing for AI spend. That's all like bad news now. So you got to be careful. What would we do? We have two choices, in my opinion. So let's go deal with this thing, and then we can wrap up for the day. Um, I think I got all the questions, or most of the questions. I think there was one more question I think I missed somewhere at the very beginning. Oklo. We'll see if I can get to that. All right. So let's go back here and let's deal with this Broadcom issue for today. All right. So we've got when we sold this Broadcom call, and I'm gonna pull it up on my screen on the other screen here, which you can't see. All right. So this $3,008 of extrinsic, that it was at the money. So that's exactly what we took in, was $3,008. Okay. If we close it now, it's 1305. Okay. Which means we're going to book 1,700 of extrinsic. The question is, do we book that extrinsic and take our 1,700 worth of extrinsic and do nothing and wait until after earnings? Or do we want to put on an in the money call at the expected move? So if we did that, I'm just going to do a quick roll looking thing here. If we rolled out the next week, if technically you would want to go down to about 375 and sell this level. Now, if it rockets, it's fine, right? Because we're still going to get 600, and we're still going to get $1,200 of extrinsic, okay, on this, right? So it's a $6 times two contracts. So $6 of extrinsic here on two contracts is almost $1,200. Whether the stock goes up or down, we'll make another 1,200 bucks. Okay. The longs are going to go up. Okay. So overall, it's going to be a decent opportunity. Now, you will have to buy them back for a pretty decent loss. So if you don't have the cash to buy those back, then maybe you don't want to do that. So you've got to make your decision. I don't have a problem with cash. Okay, so I could sell in the money, or we could simply just take it off for a day. Okay, but if you take it off and it drops, you could have at least bought the protection. So this is a good question for everybody. What do you want to do with that? Okay, if you, I think selling the at the money is not the best solution. I mean, yeah, you're going to get paid a boatload of extrinsic, $16 of extrinsic. Okay, that will give you some. Okay, $16 of extrinsic is going to give you 3,200 worth of extrinsic. Okay, you're going to get that, and the IVR, volatility is going to come out of this thing. You're going to make some cash. Okay, or do you want to buy some protection on this thing if it goes south? It's a lot of questions here. If you don't have, and if it rockets, it's not a problem for me because I make the extrinsic and that's all I care about. And the longs are going to make plenty of money, right? So we're covered any way you want. It's a tough choice here. I kind of like selling these in the monies down around here somewhere near the expected moves, 25 points, somewhere around here. And I'm gonna get 1,200 of extrinsic, and I'm going to give myself $25 of protection. Okay. If we rock it up 25 bucks, okay, I will have to buy these back for a decent amount of cash. The longs will help offset that, but it's a decent amount of cash. Okay. Let's see. Yeah, this is next week's. Okay. I'm looking to roll, not necessarily for tomorrow. Okay. I could roll. I would roll out, but if I don't roll to tomorrow, if I just roll to tomorrow, I mean, the question is, well, would you even bother rolling down? Okay. Yeah, I can book some cash, but I'm already in the money. So if this thing does rocket, I'm fine. I'm still going to get the extra $1,300 of extrinsic. That's going to come off tomorrow, no matter what. And I'm currently protected to the downside by almost 15 bucks, right? which is not the full expected move, but I do have $15 of protection. So technically, I could do nothing because I'm already in the money, right? So I think what I'm going to do is I'm going to do nothing. Right? If we rock it up, fine. I get my 1,300 bucks. Remember, if I rolled out the next week and I rolled down in the money, I was only going to get $6 of extrinsic, which is 1,200 bucks. Well, I'm still going to get my 1,300 tomorrow, no matter what, and I'm still giving myself $16 of downside protection. If it falls, I like this. So I don't think I'm going to make do a single thing. Okay, we're going to leave AVGO by itself. All right, and I think that'll wrap up. I think this was a lot of different things that we looked at here. There was a question on Oklo today. Um, I don't love it for an income poor man covered call. I think that was the question from somebody on Oklo was, is it an income poor man covered call? Um, Let me see. I think that was it. Yeah, is it suitable for an income poor man covered call? Well, what's my criteria for, and this is the last thing we'll cover in the next 2 minutes. Okay. What's my criteria for an income poor man covered call? So let's take a quick look. Right. Okay. So income poor man covered calls, I look for anything with a 50 billion or higher market cap. I like a 20% earnings growth, 20% revenue growth, and a 15% uh, return on equity. Okay. Those are my three main criterias before I even look at charts. Okay. Which Oklo does not fit any of these categories up here right now. Okay? Only NVIDIA, Broadcom, Palantir, AppLovin, Shop, Hood, Coin, and Vertiv. These are the only stocks in my entire watch list that will fit an income poor man covered call. And if I'm looking at Oklo, why does it not meet these criteria? Well, why don't I have the stuff I want on here? Hang tight. If it's not on here. Well, that's kind of a bummer. It's not under financials. What's it under? Should be under financials. I'm trying to find out what the revenue growth is. Tight, 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 tight. Hello. Oh, here. Sorry. Let's go to revenue growth and add that, and let's go to, I don't know why I struggled with that. Earnings per share. I didn't. So on Oklo, when we look, okay, down here, where did it go? So the revenue growth, there isn't any. Okay, and earnings per share growth is monstrous. And then if I look at return on equity, where is return on equity? I don't know. I'm not sure why I'm not finding it right now. Return on equity. Okay, so return on equity on this thing. Oh, I already had it here. I guess I don't. I guess. Where's Oklo again? Okay, return on equity is minus 10%. So it doesn't fit. I mean, it's a long way around these things, but it just doesn't fit. Okay, my criteria. All right, Rich drawing on my screen. All right, that's it. Let's let you guys go for the day. and we can address maybe the BA112s and such in there. And yeah, the market cap's too small. So like, there's a lot of things for my, this doesn't fit for me. So we want to make sure that we're choosing the right underlyings for me. Okay, hope this makes sense. Have a great rest of your day, everybody. And it's all good. We'll talk to you later. Bye.